2018 and 2019. And going forward, it's harder when you forecast to anticipate the level of M&As, or similarly the level of investment will depend on the economic climate and the degree of uncertainty that we may have. So indeed, that might slow down. We've seen actually some reduction, particularly on some of the high investment grade name. But there are still some concern, I have to say, especially on the leveraged finance space in the US, where we see debt continuing to build up.
We must see some really mighty big fat yields then on that, yeah? Or are they actually potentially as low as the rest of the market, which we know the answer to?
We have seen the spreads. While the spreads have been compressing on investment grade, they've actually been increasing in the recent past on speculative grade companies.
Jump on in.
Yeah, look, at this stage of the year, we all know that next year earnings are always too high. I'm talking about the projections here. So the key question is to what extent, in what proportion they're going to be revised down. So I guess the main uncertainty here is the trade talks that we discussed earlier. The sense that we have is that a lot of corporate decisions were delayed because of those issues. The question is, will they be frozen now? That would be the key questions to ask ourselves. So I think most of the discussion that we had earlier really depend on that. Is will corporate decision maker gain enough confidence to reaccelerate on the investment side? But just to add something, because you were talking about Hugo Boss and Publicis earlier and their warnings, and I think of course there are some cyclical aspects to that. But can I ask the question, what do you think that Publicis in the upturn will grow as strongly than before? Because it's an industry in complete disruption at the moment. Even Hugo Boss, I can argue that the environment has completely changed for them in terms of the way they. So we need to look at that both from a cyclical perspective, but also from a disruption and structural perspective as well. I think that's actually quite interesting.
We've got literally 20 seconds left. You want to just finish?
No, I agree that we need to look at sector-specific trends, and this includes some secular disruptions, impact of new regulations, impact of tariffs. So there are a number of possible shocks that could happen on the demand side, and then the more structural trends as well in parallel.
Alexandra, really nice to see you. Thank you very much indeed. Fascinating report, and especially chart 5.2. Thank you very much. Alexandra Dimitrievich, who is the Global Head of Research, S&P Global Ratings. Jeffrey.
Let's take the break. We'll be back in just a moment. Coming up, oil prices jump on Iranian state media reports of an explosion on an Iranian tanker. More on that when we come back.
Right now on CNBC Make It. Think you've had tough...
LinkedIn Learning offers more than 14,000 online courses to help you achieve your goals. Its short video tutorials cover business, technology, and creative skills employers look for at every level, all taught by real-world industry experts. And new courses are added every week. Plus, LinkedIn Learning is personalized, recommending courses based on your interests and skills. Start your free trial at linkedinlearning.com. Cancel within the first month to avoid any charges.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Get ready for Brexit on the 31st of October. Find out what you need to do to prepare at gov.uk/Brexit.
At Argos, save up to 25% off furniture across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends the 22nd of October. Offer excludes nursery, bathroom and garden furniture. Conditions apply, subject to availability selected lines.
The world's longest wedding dress was longer than the Grand National Racecourse. Think that's big? Tonight, the Euro Millions jackpot is a colossal £15 million. 15 million! Now that's big.
Euro Millions from the National Lottery. Amazing starts here.
Estimated jackpot rules and procedures apply. Players must be 16 or over.
You're 169 in the queue.
I proposed on the 169. She got offered the next stop.
You're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
The B&Q 3 for 2 offer is now on, including an unmissable 3 for 2 on tiles and flooring, like real wood and laminate. So hurry to B&Q. You can do it when you're 3 for 2 it. Excludes cut-to-measure flooring, flooring accessories and underlay. Every third item per single transaction in descending price order free. Offer ends November 3rd. See DIY.com.
Everybody, oil prices have jumped following reports of an explosion on an Iranian oil tanker off the Saudi port of Jeddah. According to Iranian state TV, 2 missiles hit the Iran-owned Sinopar oil tanker, causing it to explode. Another Iranian news agency has reported all crew members are safe and that the situation is under control. CNBC has not been able to independently verify those reports. We are seeking to get confirmation of the story.
And part of that confirmation, again, only from Tehran, we have NBC's team on the ground in Tehran, an update by the PR of the National Oil Company of Iran, owned by the National Oil Company. The tanker was hit by 2 explosions, probably by missiles at 0500 and 0520 this morning, according to the National Oil Company of Iran's PR team. That was 60 miles from Jeddah. We don't have any other confirmation from that at the moment, but it's coming. But bearing in mind, and as you quite rightly said off camera, every one of these sources, whether it be the INSA, the state TV, and now the PR for the National Oil Company of Iran, pretty much all coming from the state. These will all be the state, there or thereabouts as well. Investment bankers advising Saudi Aramco are reportedly set to present their final IPO valuation recommendations as early as today. According to the Wall Street Journal, bankers will suggest a valuation of $1.5 trillion. That is short of the $2 trillion price tag desired, we understand at least, by the Crown Prince Mohammed bin Salman. Aramco has declined to comment on the report. I spoke with the CEO of Saudi Aramco this week, just a day or so ago, Armin Nasser, and I asked him about this and if the company could list sooner than expected.
We're trying to be as ready as much as we can to whenever the shareholders, so that is part of the preparation. So we're waiting for the decision. As soon as the decision comes, all the preparation works for listing Saudi Aramco in terms of working with the investment banks and others to align the company for listing. I can't say it is being done.
Sterling catapulted almost 2% higher after a positive meeting between the UK and Irish Prime Ministers. The pair spoke one-on-one during a walk in the grounds of an English country manor. The two leaders agreed they could see a pathway to a possible Brexit deal.
Do you know that shot is used for weddings? It's a wedding venue.
Yes. Yeah. Many interesting wedding venues these days.
Well, I tell you this, the big story domestically at the moment is about, we can have a moment for a bit of a relax, is there's a spat between 2 wags, which are wives of footballers, yes, wives and girlfriends of the two most famous footballers, strikers in recent times, Wayne Rooney and Jamie Vardy, and their wives apparently having a social media spat about who's been leaking stories about t'other. Now, why is this interesting? Well, not really, but the point is, Colleen Rooney, who is the most famous wife and girlfriend of English football players, apart from, of course, Posh Spice, she had her 21st birthday at that venue where the Taoiseach and the Prime Minister are, and apparently got a 10-carat diamond ring from Wayne Rooney at that venue.
You do some extensive research for this programme, don't you? The depths that you plumb.
But you can tie out the wag story with the Taoiseach and Mr. Johnson. Anyway, that's the light bit. Let's go back to the serious stuff.
Raphael, unless you've got a story about Wags and
I don't, unfortunately.
Okay, fine. Good. We can move on and get back to some stocks then. Because it's CNBC.
Do you know we're allowed
CNBC.
What is it? You know we're allowed a minute, an hour to muck around.
Is that right?
Yes.
Is that? Well, nobody sent that memo to me.
Put it in writing.
Very briefly, is there a UK play on the back of the Brexit story? Is there anything you own in the UK market that is Brexit related?
Not directly Brexit related. I mean, I think the uncertainty is too high, and I think it's rolling a dice to try to find a kind of reasonable outcome for this story. So in the UK market, we are exposed to Intertech, which we think is a great company for many different reasons. But it's very much a global play rather than a Brexit play.
Great. Thanks very much indeed for that.
You're welcome.
Okay, we're going to squeeze in a break. When we come back, we'll update you on the state of play as far as the markets are concerned as we kick off business this Friday morning.
Now get ready whenever you want. Subscribe to the American...
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Get ready for Brexit on the 31st of October. Find out what you need to do to prepare at gov.uk/Brexit.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
I need to get to Birmingham in exactly 1 hour, 22 minutes. But how? A chair? But rocket-powered. Is that a thing? A chair on rockets. On rockets! A big fat rocket fest! Does sound a little dicey. Okay. How about a nice comfy chair on lovely sturdy wheels? Yeah. On super fast tracks. Double yeah. And wait, is it a Virgin train now? I suppose it is. Well, good. I'll do that. Virgin Trains, London to Birmingham in 1 hour, 22 minutes.
You're 169 in the queue.
I proposed on the 169. She got off for the next stop.
Oh, you're my 169th greatest lover.
The number 169 never screamed going places until now. Get the Toyota Aygo X-Play for only £169 deposit, then £169 a month with 0% APR representative. Just go. Aygo.
0% APR representative on new sales of Aygo X-Play over 48 months. £169 per month. Customer deposit of £169 when proposed and approved via Access Toyota by 31st of October 2019. £3,487.50p optional final payment. Subject to status to over 18s. Indemnities may be required. Conditions apply. Toyota Financial Services.
Chase the sun with TUI to over 40 long-haul destinations. Explore the beautiful beaches of Jamaica, sip margaritas in Mexico, or see the many wonders of Asia. And until the 26th of October, enjoy £150 off per booking. When you fly with us, we'll take you there on one of our state-of-the-art Dreamliner planes. TUI, we cross the T's, dot the I's, and put you in the middle. T's and C's apply. Minimum spend £1,200 and available on selected holidays. See website for details. Atoll protected.
Okay, today is absolutely no different from any other day in the fact that just about anything can happen and is happening at the moment. I mean, look at this week. At the start of the week domestically here in the United Kingdom, it was, oh, what woe is the Brexit process and where on earth do we go next? Spin forward to yesterday, and all of a sudden, pounds at its recent highs. There's hope and a real optimism from the Taoiseach and indeed the UK Prime Minister. Something's happening there. Again, the trade story out of the US. I mean, literally, I've been watching a lot of my US colleagues, and they're quite frankly, a bemusement at the oscillation of comment we've seen over China. More tariffs, actually good meetings, we're getting real progress, actually there's a real problem. Again, so all of these stories are moving like a concertina and really fraying the emotions of algorithm. You can't fray the emotions of an algorithm, can you? But you know what I mean? They're the guys who are leading this market on the trigger of every single word that's coming out of these stories. Plus, domestically, oh my goodness me, in Europe, look, you've got a Hugo Boss profit warning, and I've got to say, some quite embarrassing stock downgrades from some of the analysts now. I mean, let's face it, this is a stock that was 120 euros at its recent high in the last 2 years. Now trading, 40 odd before the latest warning as well. And some of them are just, quite frankly, so far behind the curve. There you go, I said it. If they want to have a word with me about it, then they can come and have a chat and come on there and we'll thrash it out. And on the other side of the equation, you've got management change at the top of SAP. Again, it's always a bit of I always find it's a bit sad, isn't it, when an SAP says, yeah, I'm off, and then the share price rallies 5 to 10%. There's an indictment always. Anyway, but let's move on to, and also, of course, I should say, actually in a much more serious tone, these events out of the commodity market as well, and what's going on with this Iranian tanker, which we're still trying to find out information about. So much going into the mix at the moment. Food and drink. And utilities are historically, as we would say, defensive sectors, as is healthcare. They are on the negative bias this morning. So what is moving to the upside? No surprise given the blip we're seeing in WTI and Brent on the back of what I just mentioned. Oil and gas trading up 0.8%. Banks, financials are looking up 1.3% as well. Basic resources too, moving to the upside 1.2%. The European bourses look like this. Like this. Here we go. Zetrodax. Is that yesterday's move? I think it might be. It's not. The director's talking to me again. That's great. 0.6% higher. The FTSE down 0.4%. As the pound goes up, the FTSE goes down on knee-jerk. But does that make these companies more attractive? Certainly for the domestic investor, yes. For the dollar-based investor, again, the sum is kind of it finds an equilibrium, one going up and the other going down. FTSE MIB up 0.2%. No real movement on the IBEX 35. There you go. The DAX is up 0.7%. So just building on that gain we saw from yesterday. Talking of German listed stocks, SAP has rushed out third quarter preliminary results and announced that Bill McDermott is stepping down. And this is the bit that I don't understand. I'd love Bill to explain, or perhaps maybe Jennifer Morgan could have explained earlier to Matt, but with immediate effect. You know, there's no transition. Immediate effect. The Enterprise Software Group says it's on track, though, to offer a more streamlined service and boost profitability. McDermott's exit comes following the entry, of course, of activist investor Elliott. Hugo Boss, you have a look at this one? Ouch. Ouch. I wish I could show you. I don't need to show you. I can just take my jacket off like this, and I'll go like that. I'm pointing up there, yeah? Up there. That's where the shares were. 120 euros. Boom. And then all the way down to there. I've got smears all over the screen now. Poor old Jemana on the next show. But the point is, they are down 30% in the last 3 months. It's been a long-term story of woe for Hugo Boss, I'm afraid. And now the analysts are beginning to side their numbers quite aggressively. It slashed its 2019 earnings forecast again, with third quarter numbers missing estimates. The German fashion brand blamed weak demand in both the US and Hong Kong. I'm glad we wrote fashion brand, because we keep saying luxury goods, and I think they're fashion companies. I keep saying to people, fashion, they get in fashion, they get out of fashion, they get their seasons wrong, they get their seasons right, but these are fashion companies. Never forget that when you're investing in this sector. Hugo Boss said the market environment had deteriorated in North America, whilst its business in Hong Kong was, quote, substantially negatively affected. Of course, though, I mean, this is obviously a mitigating factor since the start of the political unrest. It's the second time in 2 months the company has cut its earnings outlook. Quick look at broader luxury, because what an amazing week to look at luxury, because Charlotte, our French correspondent, was looking at LVMH earlier this week as well, and actually how they've done really well. So there is this delineation, and I don't completely know when I'm looking up at the high net worth where that line is, but there are certain brands that are big and flash, and then you've got the brands above it, where right at the top shelf, and you've got to say LVMH has got a few of those in its suite. That's why LVMH has been such a strong performer, as indeed as Hermes, which again, huge family ownership, compared with perhaps some of those ones that are more attainable for someone in the middle class like myself. Am I middle class? I don't know. Anyway, Publicis, meanwhile, has cut its full year sales and revenue targets following a difficult third quarter. The advertising company suffered a drop in spending by US clients, whilst its digital business also underperformed. The Disappointing numbers are set to pile further pressure on the CEO, Atur Sadoun, whose transformation plan appears to be taking longer than expected to yield results. Well, let's have a look. The trading halted on this one. 3-month chart down 10%. Should we have a look at WPP, though? That might be moving in the similar direction, and it is. So Martin Sorrell told us last week, and when he popped in to announce a deal this week as well, that he thought, bearing in mind he's still a top 10 shareholder, still got, I said 1.5%. He said, no, I've got 2%, but it depends where you look. But anyway, WPP, he said the business model is broken. Have you ever heard a top 10 shareholder of your company who isn't trying to be an activist turn around and say, my business model is broken, or the business model is broken? But of course he would, because, of course, he's now at S4 Capital.
Yeah, so it comes with baggage, and we have to be a little bit careful about how we deal with that. But talking about challenged business models, obviously we've talked a lot on this program about automakers and the auto sector. Just got a little bit of an update for the audience from BMW this morning. BMW have put out a number on September group deliveries, up 4.8% year on year. September BMW and Mini sales up 4.4% year on year in Europe. In mainland China up 5.8% and 5.5% higher in the United States, which on the face of it, these look like pretty good numbers given the deliveries in August were 1.9%. So probably too little information to be able to say there's a re-acceleration of deliveries here, but the number's not bad given the context of what is a surprisingly bad auto market, I think, right now. Let's pick up with Rachel Winter, investment manager at Killican Company. Good morning, Rachel. Nice to see you. Can we talk maybe about surprises then, I think, off the back of the BMW data? That's a more positive number. But a lot of this morning has been, a lot of the last couple of days actually, has been about negative surprises from corporates. We've got the Hugo Boss this morning, and obviously we had Philips earlier in the week. And I know you've been a past champion of Philips.
We have, yes.
To what extent do you think that was disappointing and was really to do with trade, the message they gave us about the healthcare business?
I think it was to do with trade. Clearly it was disappointing because the share price was down quite heavily yesterday, down about 9%. They did say it was to do with trade, and I think that does make perfect sense. Tariffs at the moment are very high indeed, and it does make sense that if you're having to pay tariffs, your margins are going to be smaller. And the main reason that update yesterday was disappointing was that they said that their margins for this year are not going to be ahead of target.
But we were hoping for some resilience. We were talking a bit about Philips earlier on in the program and how the Healthineers business, effectively, the healthcare segment, should provide them with some counter-cyclicality. In effect, they should have a robustness in the business model, which I think is what Frans van Houten has been trying to do with Philips for some years now.
So with Philips
again,
now,
the question is, how credible is the argument that this is a trade story?
Well, 88% of their revenue now comes from healthcare, so they're now very heavily exposed to healthcare. And I think because of the trade war, they have been really trying to move around parts of their production in order to counterbalance the effect of these tariffs. And I think moving that production around has been very expensive. And I think that is one more thing that has impacted their results in this quarter. But longer term, I do think the move to healthcare is the right thing to do.
Is there a guilt by association process now going on where we say, okay, if Philips has got this in the healthcare space and they're blaming trade, we need to be casting the net a little wider to see who else is going to justify weaker performance through this earnings season because of the trade war?
I don't think it's the case of who's going to justify it. I think it's the case of who is genuinely going to be affected by these tariffs and by this trade war. And I think we are now really starting to see the effect of these tariffs feeding through into corporate results. And I think it is something we do need to be very mindful of. And that's why we're watching these negotiations so closely this week.
If we get a very positive outcome from today's talks, then what do you think the market reaction will be?
I don't think we're going to get a really positive outcome. I don't think we're going to have a completely comprehensive trade deal looking at all the issues such as intellectual property rights. But I think we could have a partial agreement, perhaps some kind of delay in the tariffs that are scheduled to come in for next week. And I think that would push the market a lot higher.
In terms of trading geopolitics, we had a great conversation with Scott Teal from BlackRock earlier on, and he made the point that I cannot not disagree with, and so I do disagree with. Double negative? I'm going now. I don't know if I went to 3 negatives there. But I 100% agree with, and that is trading geopolitics is so fraught. Trading terrorism has just been so difficult to do over the years as well. How do you trade the geopolitics headlines at the moment? Because there are so many. I mean, or do you just take a step back and say, we can't do that, we have to look longer term, yeah?
I think you do. You just say we can't predict what's going to happen here. You've just got to make sure you are fully diversified. So make sure you have exposure to lots of different geographic regions, lots of different sectors, and that should help to mitigate the effect on your portfolio.
Raphael?
Well, we just don't trade on headlines. I mean, that's not what we do. I mean, again, coming back to what Rachel explained earlier, I mean, it's just a question of understanding closely the details of each business model and how each company is affected by those tariffs. So let's see. I mean, I think that if there is a positive outcome today, it's going to be anyway a temporary positive outcome because, and then the deal will need to be implemented, and then you can expect a lot of further headlines, even if there is something that is signed today at the White House. So I don't really think it's the end of something. It's just the beginning of something else, I would say.
I'm with you on that. You don't trade headlines, but you do trade the stories. You have positions. So, for instance, something like Brexit. You have got UK assets, or you will have presumably UK assets in Empire. You will have a view on sterling as well. And yet the headlines are moving this story very, very aggressively and can move and will ultimately move aggressively. So how do you position for these bigger picture stories? I mean, something like Brexit, how do you position? Again, I know what you're saying about, we have lots of offsetting factors and a balanced portfolio, yes. But some stocks, you're going to miss out or on the good and the bad if you're not positioned correctly on this.
You are. So I saw this MSCI study that came out this week that said if we get a no-deal Brexit, sterling is going to go down by 10%. If we get a good deal, it's going to be up 8%. No one thinks sterling or the UK market is going to stay in the same place. It is quite binary. It's either going to be significantly up or significantly down. So I think that really does show that you have to have assets that are going to perform in both situations. You've got to have some things that are going to go up if we get a good deal and some things that are going to go down. You've just got to make sure you're as diversified as possible.
Thinking about your performance.
I think it's about lowering your risk. So if you've got that diversified approach, you're not going to have a huge outperformance because you are always going to have some things that are going to go down in certain situations.
Pretty flat performance then if you're perfectly barbelled.
If you're perfectly barbell, yes. I think you can have perhaps a tweak or perhaps a slight movement in one direction to generate some performance. But I would say part of our main role as investment managers is to lower the risk for our clients rather than trying to take a huge binary view and either lose everything.
Return as opposed to return on capital, is it? Return of rather than return on?
No, we want to get return on capital as well.
I mean, stock that I know that you've had a positive view on is Tesco, for example, and we've seen a change in management there. But it sits in an interesting position in terms of the relevance of this news story, because potentially it could be very good news for Tesco if a difficult negotiation ends in higher product prices, ultimately an ability to pass through some of that inflation to consumers and take a slightly better margin out of that higher price to the consumer.
That is true.
There is, I guess, the risk that it dents sales, but Tesco, I guess, as a consumer-reliant stock in the UK, probably has some resilience to that kind of pressure.
It should do, and it really depends as well on how well the UK economy is doing. And if we do get an improvement there, you'd hopefully see an improvement in the fortunes for Tesco. But you're right in saying that the issue there for some time has been how low the margins are, and it would be great to see those increasing to some extent. I think the acquisition of Booker has allowed them to increase those margins further, and that certainly has been good news for Tesco over the last few months.
Forgive me for jumping in and just jump into a completely different story, if I may, because we do have this breaking news story, which, again, we talk about geopolitics and how difficult it is to trade it, which is certainly affecting the commodity markets at the moment. Whether it affects broader sentiment remains to be seen. But an Iranian-owned oil tanker struck by 2 missiles off the Saudi port of Jeddah is what we understand from Iranian state TV, Iranian state media at the moment. That's leading to a 2% rise in Brent and WTI. Oil prices jumping on the back of these reports as well. Let's get straight to our man on the ground. Ali Arutsi joins us on the phone from Tehran with more. Ali, let's just a bit more detail on this story, if you have any, please.
Sure. Hi, Steve. Yeah, well, according to the public relations department of the Iranian oil company, the tanker is called the Sabeti, which belongs to the Iranian oil company, and it sustained damages to the body when it was hit by 2 missiles, as you mentioned, 60 miles from the Saudi port of Jeddah. Now, that's what the Iranian oil company is reporting. They are saying that all the crew members on board are safe and the ship is in a stable condition. They say only the body of the ship had suffered damage and the crew are working to control it, but there is a big oil spill into the sea there, which is obviously causing some environmental concerns. But the Iranians are saying that the ship was hit by 2 missiles. The ship is in stable condition and the crew on board are all okay and they're working to stabilize the ship. But it just shows you quite how volatile those waters are. I mean, we've seen incident after incident over the summer where tankers were hit, where the Iranians were blamed. Now it seems as if the tables have turned a little bit and an Iranian tanker has been hit. The Iranians are saying that this was an act of terrorism. But they haven't pointed the finger at anybody yet. They haven't said it's their arch enemy, the Saudis, or anybody else in the region that seems to be not getting on very well with Iran. I'm sure more details will emerge through the course of the day as Iran gives some details about who they think instigated the attack and what actions they may or may not take once they've determined who was behind it.
Ali, just to put a bit of flesh on that, I mean, you've been careful not to say it, but I think I can say the finger will be pointed at the Saudis or the Yemenis acting on behalf of the Saudis. Can I ask you, not to speculate necessarily on that, but just to ask you perhaps about the broader impact on the energy price and relations in that part of the world, if indeed that's the narrative that begins to unfold over the next few hours?
It's definitely going to have a much broader impact on oil prices, on the stability in the region that's already been pretty bad. I mean, look, we saw after the Aramco oil facilities were hit, oil prices went up. And the Saudis, after making some, quite threatening statements, realized that they needed to walk some of that back, especially as the Americans didn't seem to want to get involved in any sort of conflict with Iran, so they could bring oil prices down, which they did slightly. But this will probably make things spike again. It'll make people very nervous in the region, and it'll make investors very nervous about the region and the direction it's going in, because it doesn't look like, even though the Saudis and the Iranians have sort of dampened down the talk of war after the Aramco hit, there doesn't really seem to be an opening for any sort of dialogue between them. So if that means we're going to see more of these sort of attacks, we're going to see more instability in the market and geopolitically in the region.
Ali, always a great pleasure to hear from you, even in troubled times. So thank you very much indeed for that excellent reporting as ever. Ali Aruzzi, NBC News Tehran correspondent. I was at Oil and Money earlier this week, and there were some key OPEC players there as well, including the Saudis. And something I heard from an unnamed source that was talking to me is that they think that the new OPEC, well, the new energy minister, His Excellency Abdulaziz, will be more of a trying to bridge builder within OPEC rather than Khalid Al-Fali, who tried very hard to get the relationship with Russia on track as well. So while that relationship between Russia and Saudi, Russia and OPEC is very important, one thing that was felt is that was done at the perhaps negating the importance of OPEC as a collective. So that would mean potentially bringing the Iranians and Saudis potentially closer together around the table at OPEC. It was just a very interesting point of view.
Well, I hate to be stark about it, but surely it's only the Saudis and the Russians in volume terms that can be the switch story in terms of the oil price, right?
No, I don't think so. I think you're right, of course. They are the two biggest producers. I mean, you're alluding to the fact they've got 22 million barrels a day of production.
The United States,
which takes up to 33 million barrels a day.
Swing producers.
Yes, but given how tight the market is and how concerned they are about the demand equation as well, if you've got other players such as Iraq as well, or possibly even Nigeria, all chasing the same customer in Asia and chasing aggressively regardless of any potential quotas put upon them, then that's where the ramifications comes in, and they want tight compliance elsewhere. Even despite Venezuela is an absolute disaster. They wanted me to look at oil prices, so I shall. BP and Shell are down because of that pound effect. On going back to the Brexit story. That aside, though, all the major oil producers in Europe are rallying this morning. We'll be back after a short break.
Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its symbols when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month, with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. And make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Welcome back. Quick look at some of the stocks that are moving this hour. Big moves, in fact. This is Publicis Group. This is the world's third largest advertising company. They cut their full-year sales target yet again here. The impact on the share price has been very clear. As you can see, we are off over 11% at this point, as they say they now expect sales to fall about 2.5% on an underlying basis compared to the previous outlook of broadly stable revenue.
I saw you having a wee chortle as I talked about some of the analysts on Hugo Boss while I was at the wall. And I mean it. I think the analysis of some of these companies is way too starstruck, ignoring some of the demographics and things that are really going on around the world as well. I think Hugo Boss is one of those companies. I mean, I'm just looking now at the valuation of this company still, and I'm just looking at it, to be fair, it's come off aggressively. It's got 11.6 times forward PE now, compared with a sector average of 24 times. So it's been hit for 6, and some of those analysts have clearly been optimistic that that discount to the broader sector is too much. But, and again, we've only got a 3-month chart on the screen there showing you a 30% decline. Let me just find you the 5-year. Here we go. Back on March 2015, this stock, 117, 118 euros per share. So it's been pummeled.
SAP, change at the helm. Bill McDermott is gone. We have new dual CEOs in the role, and we've got a look at the earnings here. And I think the market's been quite encouraged by what it sees in the earnings progression. What's really fascinating about this, I think, is how it is lifting the European tech sub-index here. So we're up 7.7 on SAP, which is strong, but such is the narrow grouping ultimately of the European tech lions that the fact that this stock is doing well has driven the whole European tech sector sub-index up 2.6%. which is the highest since August 2nd. Doesn't take us back too far, but it is the top performing sector this morning in Europe because of what's going on with SAP. Just to come back to the conversation we've been having, we've been focusing a lot on oil because of the story coming out of Iran this morning. Rachel, just a question to you. What do you like in the energy space at the moment?
Well, I think you can't ignore oil and gas at the moment. I think we're still going to need those for many years to come. And a lot of these major companies do offer incredible dividends that are very well covered. So I think for income investors, you can't ignore those. But it's quite topical at the moment. We've got all these protests this week here in London from Extinction Rebellion. And I think they're right in saying there should be and there will be a big move towards renewable power. So I think we are quite positive on companies offering solar power and wind power. So Ørsted would be an example of a wind power company.
If you are running a long-term portfolio model, or you're looking for stocks to hang on to for a decade, is it wise to own a Shell or a BP, given that the broader trends at the moment appear to be running against them?
You've got to look at how those companies are transitioning. So I personally think Shell has been very successful in moving itself slowly away from fossil fuels and towards renewable power. So they've already been quite successful at moving away from oil towards gas, which, yes, it's still a fossil fuel, but it does have a cleaner burn. And they've also moved more towards renewable power. And I think they will continue to do that over the next few years. And I think the biggest change in how we produce our power is not going to come from new renewable startups. It's going to come from the big companies really trying to change how they operate, and I think Shell at the moment is making a good move in the right direction.
Rachel, nice to see you, and again, apologies for having to jump in with the breaking news out of the Middle East, but thank you very much indeed for your time, and have a lovely weekend. Don't forget it's Friday. Rachel Winter, investment manager at Killick & Co. The geopolitical stories keep coming, and none more important than Turkey. Let's face it, the pivot between East and West. The pressure now on Mr. Trump as Turkey's operation in northern Syria enters its third day. We'll be live from Iraqi Kurdistan after the break.
Right now on CNBC Make It, when it comes to video games,
1 in 10 Londoners surveyed said they'll give more to charity in the next 12 months. Are you one of them? At CAF, we help generous people like you support their favourite charities by making giving simple. And we provide charities with the tools they need to perform at their best. So together, we can make a bigger difference for our communities. We're a charity and a champion for better giving. We are CAF, and we make giving count. Visit cafonline.org to find out more.
You're in charge of hiring, and Indeed has solutions, like online skills tests, which let a candidate show that they are the right hire. And we give you this toy monkey, who will bang its cymbals when the right CV appears on your desktop. Okay, there is no monkey. There is no monkey. But there are online skills tests.
See why more than 250,000 companies in the UK use Indeed for hiring. Visit Indeed.com/try today to try skills tests for free today. Terms and conditions apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
At Argos, save up to 25% off furniture across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends the 22nd of October. Offer excludes nursery, bathroom and garden furniture. Conditions apply, subject to availability selected lines.
Searching for a more memorable short break? Fly from London Heathrow to Cork from $55.99 each way as part of a return trip with Aer Lingus. Step off the plane and into a warm welcome in Cork. Surround yourself with breathtaking coastal views. Soak up the culture of Cork City or head to the colourful town of Kinsale and indulge in the best seafood around. Smart enjoys a short break in Ireland. Smart flies, Aer Lingus. Book now at airlingus.com. Offer subject to conditions and availability.
Get ready for Brexit on the 31st of October. This means that travelling to the EU will change. You'll need to check online if your passport is valid for travel to Europe. If you're planning on driving, you'll need to check if you have the right documents to drive. and make sure your travel insurance covers all your healthcare needs. To keep your trip on track, check what you need to do at gov.uk/Brexit. Get ready for Brexit on the 31st of October.
Welcome back, everybody. Oil prices jump as the national Iranian oil company says a tanker off the coast of Saudi Arabia has probably been hit by missiles, causing 2 explosions. Trade deal optimism carries through to the European Open as high-level talks get underway, while President Trump says he'll meet with Chinese Vice Premier Liu He today.
We just completed a negotiation with China. We're doing very well. We're having another one tomorrow. I'm meeting with the Vice Premier over at the White House, and I think it's going really well.
SAP shares surge as CEO Bill McDermott steps down after a decade in the role, with new co-CEO Jennifer Morgan telling CNBC McDermott believes now is the right time for a change at the top.
Rather than thinking about handing over the reins and kind of going through a transition at the beginning of the year, which is really our most busy and active time setting the strategy and getting the new year in motion, he felt now was the appropriate time to come out. We had a great, strong quarter.
Hugo Boss cuts its full-year outlook for the second time this year, putting shares on track for their worst day in more than 3 years, while Publicis also issues its second warning, sending the stock to its lowest level since July 2012.
So much going on, and what is the net of that at the moment is that the European markets are on the front foot. Very easy for me to work out percentages because you've got 10 rows and 3 of them are red. That means 70% of stocks are in positive territory as we speak. We've got some great big movers, though, in terms of individual sectors, in terms of individual stocks as well. So I'll show you those sectors just very, very quickly, just to have a look at that. You've got basic resources rallying, you've got financials rallying, and you've got oil and gas also moving up 1.3%. But what is fascinating is technology. 2.7% to good. Hang on a second. I think you know why it is. And media and household goods down 0.4%. Household goods is fascinating. I've always had this question about some of the contributors to that, including the likes of Dior, Hermes, LV, the luxury stroke fashion companies, but they do come in to this household goods story. So let's look at the individual stocks. I'll do that because I want to show you the technology reason we're up, and there it is. It was luckily where I expected it to be. SAP. Bill McDermott leaving with immediate effect. I have to say, I have an issue about immediate effect. I don't know why immediate effect happens in a well-managed transition where there are no extraneous factors or nothing interesting going on. You tend to get an announcement announced for the future. For instance, dare I say it, Bob Dudley, we had the announcement last week, leaving BP. That was talking about the transition to the February the 4th date when Bernard Looney takes over. When someone leaves with immediate effect, I don't know what the communication message is trying to say. Anyway, that's what's happening. You've got 2 new co-CEOs in that company now. Persimmon up 5.7%. Bellway up 4.8%. So UK domestic housing stocks, one of the biggest there, Barratt Developments as well, also moving to the upside. UK Bank as well, the Clydesdale Bank, very interesting there, moving up 5.4% to the downside. I've got to mention these stories as well. Publicis and WPP are getting absolutely splatted today. That's a technical term. 11.6% down for Publicis because Atos Sadoun's company really struggling in the post-Maurice Levy era as well. And Burberry is down because of Hugo Boss. They're seen in the same bracket, i.e. luxury, but not quite in that Hermes LVMH bracket as well. 12.2% easier after that latest warning from Hugo Boss.
Turkey's incursion into northern Syria is entering its 3rd day. Turkish military yesterday stepped up air and ground attacks against Kurdish militia, forcing tens of thousands to flee the area. NBC's Matt Bradley joins us from Erbil in Iraqi Kurdistan. Extraordinary that we had US and Kurdish forces fighting side by side against ISIS, and now we have these attacks from Turkey. Just explain to us where this story goes next, given the uncertainty we see on President Trump's response.
Yeah, Jeff, it's a really good question, and everybody here is asking the same thing because we're starting to see exactly what everybody expected being fulfilled. We're starting to see, first of all, a refugee situation. Now, the UN has said that there's about 60,000, 70,000 people who have left their homes along that fringe of northern Syria that hugs the Turkish border. That's where President Tayyip Erdogan wants to create what he called a peace corridor. And he wants to repopulate it, not with Kurds, but with Syrian Arabs. And that's why a lot of people are saying this is going to start to look a little bit like ethnic cleansing. And so, that is a big problem, all those people fleeing. We don't know where they're going to go. They could go deeper into Syria, maybe into regime-held territory, or they could come right here into northern Iraq. But, you remember, Jeff, that the last time that there was a massive refugee crisis out of Syria, it upended politics not just here in the Middle East, but also in Europe. Nobody wants to see that happening again, and we're really headed on the road there. The United Nations said last night that they could expect the refugee situation to balloon to something like 300,000 displaced people within Syria. And right now, those aid agencies, they don't have the resources to take care of them because they're already drained from previous crises and because they're sort of evacuating a lot of their personnel out of fear for their safety. So as winter approaches, it's going to be another wave of lethality spreading across northern Syria. The other issue is ISIS. President Trump yesterday tweeted that they were taking out the so-called worst of the worst, the Beatles, the two London-born ISIS members who were seen beheading Americans on television. Now, he said that was the U.S. taking care of the ISIS problem as Turkey bears down on the ISIS members who have been detained by the Syrian Democratic Forces, that mostly Kurdish militia in northern Syria. But it's kind of a tacit acknowledgement that ISIS could be released, that the Turkish incursion could open a Pandora's box. There are some 12,000 hardened jihadis who are being detained by the Syrian Democratic Forces in northern Syria. There are something like 50,000 members of their families, women and children, who are also hardened ideologues. The fact that the Trump administration decided to go in and take those jihadis, just two of them, shows that he knows and the administration understands that there's a very real risk that these jihadis could be released. They could be let out into northern Syria, and they could have the possibility of reforming that caliphate that so jeopardized everything here in the region and terrorized people here in Iraq, in Jordan, in Syria, and in Turkey. So, all of those worst concerns about what was going to happen with this Turkish incursion, we're starting to see whiffs of that being fulfilled. Jeff?
Matt, obviously there's been a lot of shock internationally, I think, at what's taken place over the last few days here. Just in practical security terms, how vulnerable are remaining U.S. forces in Syria at this point?
Yeah, Jeff, that's almost a non-issue. There were only about 100 of them left, and they were very capable of beating back from the border. They can protect themselves, and they can be very easily airlifted out of there. The Turks, the whole reason that they invaded as they did now was because they had assurances from President Trump in that controversial phone call earlier this week that he was removing U.S. forces. If one hair on one U.S. soldier gets hurt by any Turkish incursion, then it's going to be a game changer. So I don't expect that the Turks are going to risk it at all. The United States, obviously, are allies of the Turks, and even though the Turks have a major sophisticated war weapon that's operating in northern Syria, they're going to stay well clear of any Americans, and the Americans are going to stay well clear of any Turks. So I don't see that game changer happening anytime soon. The real threat here are the refugees, the civilian catastrophe, and the possibility of ISIS once again being unleashed. Jeff?
Matt, thanks very much for joining us. Matt Bradley, who comes to us from Erbil in Iraqi Kurdistan. Let's catch up with Yerlan Sizdikov, who is here round the desk with us, Global Head of Emerging Markets at Amundi. Good to see you this morning. If we could just focus on Turkey. How difficult does this now make investing in Turkey for an international investor? What damage is being done through this story, do you think, to confidence in this asset?
Of course, clearly creates new risks for the investors in Turkey. We've seen sanctions in Russia creating a really strong impact on the domestic economy, and the first, of course, round of sanction has been already there, and we have been threatened already by United States to impose additional sanctions on S-400 purchase, which I think a lot of investors already forgotten about. And then now is a new round of sanctions potentially that we've seen already, a bipartisan bill that was already there in the Congress that can target military and energy sector. So I think the weakness there, of course, is based on not only that. So we've seen already the relatively weak Turkish economy in the last year, and although, of course, we've seen a recovery, and we're hoping that the new economic policy that Erdogan is pushing today will also create opportunities for growth. But I think this growth has been quite fragile, and seeing new sanctions that actually will be potentially could be imposed on Turkey will definitely destabilize that a good momentum that we've seen in the Turkish economy.
So what advice then are you giving to clients who are asking you whether the bad news is all in the price?
We have been actually reducing our exposure to Turkey. We have seen the fact that the already rate cuts that have been priced in. So on the rate side, we don't think there's going to be a lot of rate cuts coming in, potentially not more than what is consensus today, 75 basis points on October 24. On the currency side, I think we still think this is a fragile situation, given that the oil prices that again shooting up again after the incident we've seen today, and also the fact that we think we will see a continuous pressure coming from the sanctions. So I think on the growth side, we would probably be a little bit more cautious, and therefore we are paring back some of our exposure in Turkey. I'll be careful.
Look, I mean, I agree. I think Erdogan perceives a threat now coming from Kurdistan, and none of the four countries that where Kurds settle really want an independent Kurdish state. So look, it's absolutely possible that the situation deteriorates, that the conflict become bigger. So we already have the Turkish lira and the bonds back to where they were like in August. So further sanction could make the situation worse. So it's historically Turkey has been a very volatile economy. If you look at 20 years ago, so it's a very fragile situation that is very difficult to play even tactically in the short term.
How do you feel about moving into the Middle East region on this as well? I note a sense of caution about the UAE from your copy as well, a sense of caution caused by the geopolitical situation. Are there assets in that region that you have grave concerns about, or assets in that region you think actually are quite good at this level?
Well, of course, you have a great sensitivity of the region to oil prices, and therefore, if you do really see that a risk premium being built because of the security situation in the Middle East, I think we should really think of that region from this perspective. So we definitely would be more cautious on countries like Oman, for example, if we would really think that oil prices will continue to go down.
This is the point I wanted to get to. Sorry to interrupt you slightly, but if the oil price, if we have greater geopolitical tensions, the oil price goes up, and given the lack of diversification so far of these countries, then they are in a better economic profile potentially from a heightened price in oil. But if there is no geopolitical tension, then the price goes down, hence they are losing their main revenue stream. Herein lies the conundrum for investors and viewers.
Well, look, the investors typically are more short-termistic than we would like them to be. Therefore, the first leg will be the leg of pain, when you will see there's a lack of revenues and lack of ability to adjust your budgets, because let's not forget that for Saudi Arabia, the break-even from the budget perspective, the price of oil would be probably in low 80s today. So if really we don't see that, of course, we will continue to see fiscal pressures on countries like Saudi Arabia.
Does fiscal equal social? I.e., if you have fiscal pressures, does that mean social pressures?
Well, definitely. This is always going to be a fine balance between how much of the fiscal you have to give in order to maintain social stability. So definitely that rigidity that we've seen in a lot of Gulf countries really stems from the fact that you do have this social aspect that you really need to worry about.
Yolan, it's been a difficult ride for emerging market investors, and if you look at a blended index like the MSCI, it peaked effectively in January of 2018. Given that we've seen coordinated interest rate cuts, it feels globally, particularly in a lot of emerging economies at the moment, is there any reason to be encouraged that we can see a re-acceleration of prospects coming into the fourth quarter of this year or into early 2020?
Well, definitely. It's not only the global central banks, but also emerging central banks have been actually following suit and really trying to create that incentive on the monetary side for the countries to start resurging in their growth. However, of course, fiscal side has been somewhat more mixed in emerging markets, where Asian countries do have a significant amount of cushion on the fiscal side, whereas in Latin America or maybe in European countries we are more constrained on the fiscal side. So you do really need to see it in a complex situation where we have not only global monetary stimulus, but also domestic stimulus. However, I think with this year, and why you rightfully notice that there's been pressure on emerging market assets in general because of the lack of growth, I think this potentially could continue. So we're seeing that maybe the green shoots for the second half of next year, when we'll see the policy response from more on the fiscal side, and that may be sometimes also we'll need some time to adjust expectations of the market as well for the growth. So far, we've seen a surprisingly weak earnings cycle in emerging countries. So far, we've seen also surprisingly weaker also credit outlook for emerging markets. So I think that coupled, I think we'll probably need to be a bit more cautious on the equity side, on the FX side.
Yeah, Raphael, just in terms of your strategy, stock selection, the growth really is still in the emerging world, effectively, but do you capture that by buying emerging equity, or do you capture it by shopping in the West for companies
we're shopping in the West, actually, and I have to say that you're right. I mean, most of the growth comes from emerging countries, but I think it's maybe less in commoditized product now, so selling basic staples to emerging countries was a very profitable business for a very long time, but it's now much more complicated to make money on that. So you need to be maybe to go a bit upscale in terms of the type of product that you sell to those countries. Make sure that they are differentiated, because the local competition is now getting tougher. So we really target companies that can deliver differentiated products to these kind of countries. But you're right. I mean, most of the growth comes from those countries. Yeah.
Okay, Yolan, good to see you. Thanks very much for coming in. Yolan Sistakov with us, Global Head of Emerging Markets at Amundi. Raphael stays with us.
Just came up on the show. Oil prices jump on news of an explosion on an Iranian tanker. We're trying to get more clarification from more sources on this one, but the latest developments coming next.
Time is money. Or so money says. Well, money. I know you like to dictate every hour of every day, add to my to-do list and throw the odd spanner in the works. But not anymore. This is my business, and I run it on my watch. I'm in control now, money. And times are changing. Save time with instant business invoicing, now on the Barclays app. Search Barclays Business and make money work for you.
Must have a Barclays business account. T's and C's apply.
We could play epic music, or we could speak in an overdramatic tone, or even set off fireworks. But that's just not smarty. Instead, we let our offer do the talking. Right now, you can grab 25% off our unlimited data SIM. That's just $18.75 a month, with no speed restrictions, no credit check, and no long contract to tie you in. Now that's smarty. Just search Smarty Mobile and switch today. It's easy. Offer available for a limited time only. See smarty.co.uk for terms.
At Argos, save up to 25% off furniture across thousands of lines. Our autumn-winter home and furniture collection is here. So stylish, you can wear it. With Argos, you're good to go. Offer ends the 22nd of October. Offer excludes nursery, bathroom and garden furniture. Conditions apply, subject to availability selected lines.